Hey Nick, how you doing today?
Doing great, Dave. It's Friday, sun is shining. Talking about
It
Bitcoin.
is. Yeah, Bitcoin. Everybody likes to talk about Bitcoin.
Yeah. So the big question that we're hoping to answer today is Bitcoin an investment? And before we can answer that, I guess we got to first figure out what is Bitcoin, or more importantly, what is a cryptocurrency, which is
Yeah,
Bitcoin is one of many cryptocurrencies. So let's start there.
yeah. So a cryptocurrency is well, I have trouble even calling it a currency, but that's a
Right?
different topic. So
Now
they've
you're
been
just
around.
aging yourself.
Yeah, right. It's a cryptocurrencies have been around since 2008. They're meant to be a means of facilitating transactions online between two people.
Yeah. The whole history behind them is essentially they were a way to disrupt the banking industry, right?
Right,
So
right.
a group of techies, if you will, decided that they didn't like the way that the banking industry was being run. They didn't like the fact that the banks had all the power and control over a lot of those things. And so they decided that why not have a digital currency, if you will.
Right, right. And so it's kind of a active rebellion in a way,
Right.
and which is interesting. Uh, I was really surprised when we were looking up statistics for this that there are actually 6,700 cryptocurrencies out there, at least as of January of
Yeah, that's
2020.
mind blowing. There's a couple popular ones that everybody's heard of. Bitcoin, probably the most
Mhm.
prominent one that people have heard of. My favorite story is Dogecoin because it was
Right.
basically created as a joke, and now is is at least from the price that you would have to pay is considered very, very valuable
Yeah.
cryptocurrency.
Right. Right. Um, And so how do these things fit in the world of finance? Are they an investment? Are they a currency? How do we look at these things?
Yeah, it's definitely interesting, and it's something that, we're having more and more conversations around. And it's a tough one, and we're going to tackle some of the pros and cons of whether or not this should be something you consider investment. But it's similar to one of the earlier podcasts that we had on investing into new industries as well.
Right.
Same kind of thought process behind, this is a new and interesting thing, and you hear stories of people making immense amount of money, a great return on these things, but that doesn't necessarily make it an investment per se.
Right. Right. So yeah, the I think there's a dichotomy between Bitcoin and cryptocurrencies in the technology behind it. And the technology behind it is blockchain technology, which I can get in my over my head really quick trying to talk about blockchain, but the little bit I know of it makes me think it is probably a truly revolutionary technology that, you know, 10 years from now will probably be akin to the computer revolution of the late 70s, early 80s.
Yeah, and then we'll be looking at it back on it saying, "Hey, remember when we used to use blockchain for digital currency? Man,
Right, right. That was silly.
what were those guys thinking?"
Yeah, yeah, right. But so blockchain is a technology. It's basically like having a huge database spread over hundreds and thousands of different computers that supposedly is incredibly hard to hack and very difficult to tamper with, which is what makes it, which is what brings about the idea of it being a viable technology for currencies.
Right, yeah, and so the blockchain technology, I think, like you said, is going to be revolutionary. Whether or not cryptocurrencies as a part of that technology take off is yet to kind of be seen. What we have seen is a lot of speculation on whether or not they will take off and become more prominent. And I think, when you think about, at least from what I know about blockchain and cryptocurrency and kind of what's happening in the banking world, is right now it doesn't function very well in terms of in the digital world. There's a lag between moving money around, and it's, kind of old school and how that stuff gets done through the automated clearinghouse and the timing of that. And this really should theoretically revolutionize and speed up a lot of that process as well. And that's
Right.
kind of some of the excitement from the financial implications behind the technology itself.
Yeah, yeah. So, but how do we look at a cryptocurrency like Bitcoin as part of a portfolio? And it's one of those situations where it's neither fish nor fowl. It doesn't fit as in any of the traditional categories that we use to think about portfolio structure. And which include, like, you can't even group it in with foreign currencies. There are investment strategies that have a lot of merit where um, you're buying one currency versus another as part of a hedge against how the dollar does. And when we think about cryptocurrency in terms of, I think we have to think about what is a currency. And the number one thing is it's got to be a universally accepted medium of exchange, right? I have to count on, if I'm going to do my trading in Bitcoin or Dogecoin or Dave Bucks or whatever I want to make up, I've got to assume that you, Nick, not on the other side of our transaction, if you're going to buy something from me and I'm going to accept what you're paying me in, that has to be kind of universally recognized, and we're not really there with any of these cryptocurrencies. The other thing, and maybe part of what brings them to everybody's attention, is the price volatility, right?
Mm-hmm.
If I'm doing transactions in a dollar, I can be fairly certain that the dollar you pay me for an apple today will buy me a dollar's worth of stuff approximately tomorrow, right?
Right.
And we'll look at a chart of Bitcoin here in a second, but there are times when Bitcoin would have bought you a pair of high-end designer shoes, and times when it would have not bought the shoebox.
Right.
And you never know from day to day what that might be.
Yeah, and so, when you think about it in terms of an investment, and we say this about all kinds of investments, really, and that is anytime you hear stories about people who are making tons of money, that means they're taking on tons of risk to do it, especially over a short
Right.
period of time. So
Right.
that relationship between the return and what you are actually, the return that you receive and the risk that you're taking, that's something that is always high risk, high return, or high potential return, right? And so
Right.
anytime you have a high return, like we're seeing, if you're joining us on our YouTube page, you'll see some of these charts we have up here. But if
Right.
if you're getting the types of returns that we've seen in Bitcoin since 2014, is because you're taking on a ton of risk in order to do that.
Right.
That's the only way that
Right.
relationship works.
And in that sense, it's no different than buying a small company in a new industry, like we talked about a couple
Right.
weeks ago, and you mentioned at the beginning of this podcast. It could be a home run, and it could be a complete strikeout. You just don't know. Um, so if it's going to be a currency, it's got to be universally accepted. It's got to have a somewhat stable price, and there has to be something backing it, right? The United States
Right.
dollar is backed by the full faith and credit of the United States Treasury and the taxing power that goes with it. And if you think about what's backing Bitcoin, it's really just a bunch of other people who think Bitcoin's cool, right?
Right.
And and that kind of goes back to the GameStop conversation that we had. Why is GameStop so expensive? Because a bunch of people bought it and drove the price up. And right now, that's the same with Bitcoin. A bunch of people bought it and drove the price up, but there's no value underlying it necessarily, except the hope that it will catch on as the universal world currency at some point.
Right. And the issue that brings up is a lack of regulation, right?
Right.
So there's no oversight by governments or central banks. And
Yes.
so if there's no regulation on it, who's to say they don't change the formula, or, there's lots of different potential ways that
Yeah.
could be harmful for the price, hence the return, hence the risk.
Well, and the other part of regulatory risk is, federal governments around the world count on their ability to control their economies vis-a-vis their currency, and they're pretty jealous of that, you know.
Yeah.
So if Bitcoin start, or any cryptocurrency starts infringing on that, look out, in terms of how transactions are treated and the legality of them. Back to that universal acceptance. Um, that could be make for some really interesting regulatory situations anyway, where all, and then, so what happens to the value of a cryptocurrency that everybody thought was going to be the next big, medium of exchange, and all of a sudden it can't for regulatory reasons. All of a sudden
Right.
no one wants it, right? And just
Yeah.
like anything else,
Right.
sorry, yeah,
No,
the
I
price is supply and demand, right?
Yeah, exactly. And I was just going to say, we've seen some of that more recently with some of the potential tax law changes and how, trading is going to be taxed on Bitcoin and other digital
Right,
assets because it hasn't really been addressed. And as that starts to get addressed, some people are shying away from it. Now
right.
that the IRS is catching on to what's happening and the amount of wealth that's being made in
Yeah,
trading.
yeah, yeah. The we look at the returns of Bitcoin over the last few years, and it's been pretty positive. In 2017, it was ridiculously positive.
Yeah.
Uh, it was up like 1,557%, according to a chart that I've got here. And in 2020, it was up 290%. I mean, that's crazy. But 2018, it was down 82% from that high. I mean, that's a pretty wild ride. Um, so, again, it's a speculative thing.
Yeah,
Um,
and I think that's the key word, speculative. And this is not to, sound like a couple of old guys telling you, well, the new way of doing things isn't the right way to do it.
right,
It's more a couple of old guys telling you, think twice about, how much of your portfolio, if you do want to own some Bitcoin for whatever reason, just like I would tell you if you wanted to go play the casino or
right.
sports
Buy a
bet,
lottery ticket.
buy a
Yeah,
lottery ticket or invest in a cannabis company like we've talked about
right,
before. These are things that we don't necessarily want, or we're not telling you not to do them. We're telling you not to do them with a significant portion of your investment
right.
portfolio and to do them more as a, hey, this is fun and cool, and I can text my
Yeah,
group text about how much Bitcoin I own, and less
right,
about how this is a long-term strategy for generating wealth and
right.
or has any part to play in terms of your overall investment portfolio.
Yeah, yeah. I would go a step further than saying it's a small part. I would say it's really not part of your investment
Right.
portfolio. It's not really an investment from the standpoint of having some value that we can build expectations around. But we all have those conversations with clients that like to like to play the lottery, like to go to the casino, like to buy individual small company stocks every now and then. You just can't. You can do it for fun, but don't do it thinking this is an easy way to riches. Just because it was one time or two times over the last few years has absolutely no bearing on what it's going to do next year.
Right.
You know.
Absolutely.
Um, so stealing from our friends at Vanguard, they list five, what they see is the five big investment risks to cryptocurrencies, and I think this is a pretty good summary. The first big risk being volatility, and we've talked about that. You'd be up 1,000% one year and then down, all of that the next. Liquidity risk, there are issues with being able to get in and out of these quickly based on the way the transactions work.
Right.
Um, Lack of regulation, they're not overseen by any government or central bank. And so, all those folks running those Bitcoin mining machines could decide to change the rules on you, and there's not much you can do about it. Um, there's no central market for pricing. So included with the volatility is the fact that the pricing can vary from source to source too. And we see that a little bit with real currencies. If you've ever traveled abroad, you'll see like one bank may exchange your dollars into euros at 1.2 while one's at 1.23. But we're talking like marginal differences, right?
Right.
But with cryptocurrencies, since there's no rules and there's no central bank in charge of it, it can be quite the variable. And the last kind of broad risk category, number 5, being cybersecurity risks, right? And we saw that with Bitcoin a couple of years ago. I think it was in 2018 when they had the major hacking incident, and a bunch of people just were locked out of their Bitcoin collections,
Right. Yeah.
accounts, whatever you want to call
Yeah.
them.
Unfortunately, you can't hide your digital currency under your mattress.
Right. I
And
like to
there's
think,
no, go ahead.
yeah, I like to think, that remember Super Mario with the coins
Oh
and
yeah.
those blocks with the question marks on them. I like to
Right.
think that there's big blocks with question marks on them that are full of those gold coins from Mario Brothers
I
from
like
back
it.
when we were in high school or whenever that was.
I like it.
Uh, Yeah, and then, and then there was that story. I think it was a month or two ago. I heard about the guy who just plain lost his password
Right.
to
Yeah.
his millions of dollars of Bitcoin. And I mean, if you lock yourself out of your credit union account online, there's probably going to be somebody that can help you figure that out, right?
Yeah, absolutely. Well, and I think that's the point. The difference is, yes, everything is digital right now, but there's a lot of security backup
Yeah,
for your investment accounts, for your bank accounts, where the cybersecurity risks really are falling on the banks and the financial institutions. If something bad were to happen to your account, they're usually responsible or making you whole. And in the
right,
digital cryptocurrency world, that's not the case.
right. So, as with anything that we talk about, just beware of the risks, keep it in perspective. Um, if a client, the bottom line is if a client comes to me and says, "Hey, I want to buy Bitcoin," my response is going to be, "Okay, that comes out of the fund money part of your budget. You let me worry about this stuff. If you do so well in crypto coin that we don't need to worry about this, great.
Yeah,
I'll be as happy as you are, but
right.
you know, I'm your we're your hedge, your hedge
Yeah.
against that not working out." And again, I will not be surprised if 10 years from now, the blockchain is a important part, and cryptocurrencies may be an important part of what we do. China is working on a essentially a state-run cryptocurrency. So,
Sure.
that could change the way all of this works, but it's not going to be Bitcoin that wins in that situation. It's going to be whatever digital yuan the Chinese
Right.
government has created.
Yeah, that's a
So,
great point. With 6,700 of them out there, whatever it is right now,
yeah,
who knows? There's no tell on who the winner is going to be, but I can
right.
guarantee that all 6,700 of them probably aren't going to be
No,
functioning currencies in the future.
no. And I doubt the Chinese government likes competition.
Yeah,
So,
not from what I can tell.
so, okay.
Yeah, well,
Again, I don't know what else there is to say about it.
no,
See,
I think this was good. Definitely proceed with caution on any of this stuff. We'll put the Vanguard piece in the show notes if you're interested in taking a look at
yeah,
their kind of
very good
explanation and
summary.
reasoning. And as always, if you have questions on this or other financial topics, feel free to reach out.
All right. Thank you, Nick.
Yeah, always a pleasure.
Have a great day.